That's a bit better, guys. Good afternoon and welcome to today's Trading the Markets Live. We're trading the US Open live and it's Monday the 10th of September. Thanks for that one. I just started with the mute button on yet again. Apologies. Okay, so what we're looking to do here, we trade the financial markets technically, and we have a methodology that we utilize to identify firstly high probability trading opportunities. Then we have a means in which to execute trades. So planning those trades is an important phase. We don't just want to be jumping in and out of markets. We want to have a coherent methodology that we apply consistently. And then once we're in those trades, it's then about our ability to manage those effectively with a strong sort of focus on risk management firstly, and if you can get to a situation where you can mitigate risks on trading these markets, it puts you in a really great position to start focusing then on seeing a nice move. And everything is done with one aim, and that is obviously to book in consistent returns when we trade these financial markets. So without further ado then, let us just draw your attention to our risk warning. Please do take a brief moment to familiarize yourselves with the risks involved in trading these financial markets. Okay, so just before we begin, it's important that when we sit at our trading desk that we understand the news flow behind these markets as things currently stand. So what I'll do is I'll get up Forex Factory currently up on screen here, and we were able during the morning session to take on board the price action for this news event at 9:30 impacting the British pound. And as you can see, we've had a slightly better than expected GDP figure and a slightly worse than expected manufacturing figure. Now, that obviously can be significant. I suppose the fact that their minimal deviations is probably within the realms of kind of current price action, but we have seen a little bit of a move in the end regarding the British pound after a while. So we'll have a look at the British pound very shortly. Now, as we look forward for the rest of the day, we don't really have any news events that can be of any significance to us. We have, excuse me, not this one. We have one of the FOMC members due to speak about the economic outlook at the Albany Chamber of Commerce, so you wouldn't expect that to have any major impact on the markets to any great degree. So as far as news flow is concerned, outside of the major geopolitical events, and just to remind you, we're talking about global trade tensions, or global trade wars, should I say, between the US and China, and the US and Europe. In addition to that, we have Brexit negotiations, we have tensions with Iran in terms of sanctions and the impact that can have on the oil markets. So there's a number of significant events ticking along in the background that are likely to add significant momentum, let's say, to some of these markets at any moment. Now, that's where the benefit of trading the markets with a technical understanding can play a really important role. We'll obviously have to react to these fundamental events, but really, when we look at a price chart, it boils down to the actual reality of working out what price is doing, and then we can go back later on and find out the origins of that move or that volatility or whatever the case may be. So actually focusing on what price is doing is a really good indicator for what may be going on in the background. Okay, so that's just a little bit on the news front. And so what we'll do now is we'll get up our trading platform currently up on screen, and we're watching the gold market very, very carefully. This is one of the markets we're going to be looking to trade. Not an awful lot has happened really over the course of the morning session. We bounced off this low, we created a double top to the upside, and we just rolled over back to the downside. Now, the level that we're really interested in this market is the 1189 level to the downside, and it looks like we're getting a bit of a breakout to that level as we speak. So we might not be too far away from seeing an opportunity in this market for the gold market to sell to the downside. So we've been monitoring this market very, very carefully for quite some time. So that we'll come back to the gold market in just a moment. So let's start. We'll just conduct a quick review looking at daily time frames. This is the methodology that we use to identify the opportunities. So we're not really looking to identify opportunities on the smaller time frames. We're zooming out. We're having a look at bigger time frames like your daily time frame and see how these opportunities have a bigger picture view, let's say, before we go into the smaller time frames. So really what we have is with the euro dollar is the fact that this market is effectively in a period of consolidation. Now this period of consolidation has been going on since mid-May. What I'll do is I'll just get up the pen just to show you, and apart from seeing a little bit of a break to the downside during this period in here during mid-August, we've effectively been in this sideways moving market. Now we do agree that there is a downward pressure being applied on this market. So every time price action gets to this level in here, it rolls over back to the downside, and the overall trend is without doubt to the downside. So for now, we're still looking for opportunities to sell the euro dollar. Now, of course, that could change very, very quickly if we had a constructive break above the 1797 or the 1718, sorry, the 1.18 level, so the 1800. So for now, we're just in this sort of sideways moving zone. So yes, there is opportunities to look to buy at these levels, but you're running into levels of resistance. Very likely to get a move up to these kinds of levels, and maybe then opportunities for this market to push lower. So of course opportunities exist, but at the moment we're sort of bouncing off the weekly low, and we have a major level of support around the 1500 level, just below that level as things stand. So information to take a trade right now is just we'd prefer to be patient just to see if we can capitalize on a bit more of a market move. So this is the market we were looking at. It started to roll over to the downside, and then as the morning unfolded, I suppose in line with the GDP figure, seeing sort of a bit of strength start to kick in to the pound dollar. And look at which level this market is sort of struggling to break again. It's this descending level, so an important level to be mindful of. However, from a technical perspective, we are still in this upward trend from these lows back here in August. Now it needs to work incredibly hard for us to even contemplate getting into this market. And if we're going to look for the high probability trade to the upside, we still need to see this market move considerably. So we spoke this morning a lot about the potential for a lot of resistance in and around the areas that could provide the next leg to the downside. So we kind of need to clear those levels for us to have a clear shot or a significant opportunity. Okay, so this is okay, so let me take that off. Sorry, bear with me a second. I'm just here we go. Okay, so it's this resistance here that we need to be constructive and to break. So if we got a really strong break below this level down here, the weekly low, then we'd be literally off to the downside once more. So be mindful of the downward pressure like we've seen in the euro dollar. Same situation applies in the pound dollar. Okay, so let's take this off and we'll have a look at some other opportunities. Yeah, there we go. So the dollar yen now in a sideways moving pattern for a significant period of time. So again, the weekly high and the weekly low would constitute actually higher probability trades than what's currently happening within this kind of range. So bouncing higher and bouncing lower. We've got an interesting move today in the dollar against the Swiss franc. From a technical perspective, there's a bit of resistance around these weekly highs, and even marginally above the weekly high, the 97.96 can provide significant resistance as well. So we're going to be interested to see how this market is performing. So we keep a close eye on that, but it doesn't really present a great opportunity for us just yet. Be interested to see if this market can sort of hold any gains above this level in here, which is effectively the 3200. So we're going to keep an eye on the market, but we probably don't think there's significant further gains in this market, but we should wait and see, of course. A market that we are interested in is looking for an opportunity to sell the Aussie dollar. It looks like we're getting a bit of a flush lower, but you can see how this market moves sideways, so it creates a bit of a floor in this market, and that coincides with the weekly low of the 70.98 level or the 7100 level to the downside, and there is our high probability trade to the downside, and we're only talking about 15-16 pips further to the downside. So we're just going to be patient for now, and what we want to guard against, just so that you know, is the fact that this market might sort of decide to do this and create another structural failure, which would be the situation where we're creating, higher lows, which is the beginning of a trend to the upside. So we want to sort of be patient and practice what we preach and get the break to the downside, because the longer this market moves sideways, the more attention it will get, and the more the breakout will be potentially quite explosive. New Zealand dollar, you can see this area in here running into some resistance, which is exactly what's happened. We do quite like this market to the downside. Again, similar situation. We would like to see this market break to 65.12 to the downside to give us that high probability opportunity, but we'll come back to these two markets now very shortly. Strong rejection in the euro dot, in the euro pound. Euro was strengthening considerably against the pound, and a lot of that has retraced since the GDP. In fact, probably half an hour after the GDP figures were released, we started to see some strength come into the British pound, but still not strong enough for us to have actually to view it as a high probability move. Euro yen extending higher, as you can see. A strong rejection below the weekly low, the 127.86 level to the downside. So we're seeing a bit of positive price action come into the euro yen. Same situation with the pound yen. We're still firmly within Friday's highs and lows, so that doesn't really give us a fantastic opportunity right now. Another market we're going to continue to look at is the gold market, like I've said. So it looks like we're getting a constructive break, well, hopefully we will, below the 11.92, but again the high probability trade is the 11.89, just a little bit lower. US oil, we've retraced now this morning's move to the upside, very likely to come into resistance around the 68.80 level and the $69 level. So it looks like that's what's happened. This market has just rolled over now to the downside, so it doesn't give us fantastic opportunity to the upside anymore, even though we were looking at it this morning, but we have not seen the follow through. A market that we'll be looking at for the US Open will be the S&P 500. We'll see when the New York Stock Exchange opens whether these markets get a nice flush of capital and we start getting a really strong explosive move. We'll have to wait and see. So out of all of these three trades, the S&P is just looking a bit more coherent, a bit more balanced, and we're seeing a little bit of strength creep back into a few of these markets, although this is pretty bearish. We're at the lower end of this sort of 4-day devaluation effectively. So but what we are seeing in the Euro stocks is a nice strong bounce off our weekly low of the 32.73 level. So we're getting that bounce off this level to the upside. So we've had the majority of the move already today, but really we will come back to the US equities at the point when the at 2:30, and this is all UK time. So in our analysis and in our general overview, guys, I don't know what you think. Maybe there's other opportunities that you quite like the look of, and we'll be more than happy to sort of take a look at some other markets. But right now there's a little bit of indecision across a number of these markets, but we'll continue to look at some of these high probability trades in more detail. The first one being the Aussie dollar, although we're going to have to wait a certain period for that. The next trade is the New Zealand dollar. So we'd expect this market to roll over to the downside. Yeah, hi Lewis. No apologies, it was me. We just started with the sound off again. Pleased you're back. So we've got these levels. Let me just, there we go. We've got this level, as you can see. The other two markets from a high probability perspective would include the gold. So we want this to extend a little bit lower. I'm going to show you the weekly low just so that we've got a visual to work with. And the final market we're going to have a look at and just see how this market behaves, just coming in to the open of the New York Stock Exchange, and that would be the S&P 500. So this is effectively our trade plan, and what we quite like about this is the pullback from the highs and a bit of indecision on Friday's candlestick, and then this particular move to the upside now at the 28.84 level. So from a support and resistance perspective, you can see, you know, have we bounced back to previous levels of support? The answer is yes. So it kind of stacks up from us from that perspective. Plus, if we do a little bit more, excuse me, so we'll conduct a little bit more technical analysis than that, and we'll just sort of loosely sort of track this market as it's pushing higher. So this could be construed as an area of support in and around this area here. So we don't have to be too exact with these levels, but there's just an argument to support a bit of a buy trade above that level. So let's go into a smaller time frame then, and we'll look at this high in more detail. So that is Friday's high, just sitting in there, and you can see we've tried to extend this move to the upside, but effectively we're kind of trading a pretty narrow range. So what I'm going to do for that with that is just have a little bit of a band. So what we're suggesting by looking at this market is we're kind of in a bit of a sideways holding pattern. So anything in here, you know, we're not too keen on either buying or selling, but a break above the level or a break below the level, below the 28.83. We'd prefer to be buying it. That's what we're looking to do. A sell trade we'd have to look at and consider very, very carefully, because the construct of that trade is on a different level, so to speak. So what we'd like to do is to eventually this market to break higher. That would allow us to maybe even buy above this level and place a stop loss below that level, and give us, you know, potentially a decent risk reward trade in this market. So we'll wait and see. Obviously we need that kind of price action to start to unfold. Okay, So we'll go back to our price action. We'll have a look at these markets very carefully. We'll wait and see if we get any follow through in these markets. I suppose it must be said that the trade in the S&P can be a little bit more of a time related trade, and what I mean by that is if you get the move prior to the open, so let's say sort of 2:15 you start getting this move, what you can often find is when the market opens you could get a complete sort of rejection of that level. So we're not looking to trade this prior to 2:30 necessarily, unless you do get a no-brainer trade. So there's certain situations which you can, on a discretionary basis, where you can take that decision. But with a sideways moving market, we're in no hurry to be getting into the upside. Even if it does extend higher and the open starts to kick in, what that could imply for us is, let's say it just starts ticking up higher, which is fine. But what you're often likely to get is a little bit of a pullback and an opportunity during proper market conditions to take this market again. So no need to rush or to panic by any great extent. So bear that in mind. So we'll come back to this level and certainly these highs very shortly. Regarding the Aussie dollar and the New Zealand dollar, not really following through to the downside. The New Zealand dollar did get quite close to so we'll keep a close eye on these levels. So what I'll do is I'll just put up on screen then in terms of our trade view. We might need to be patient today, obviously, by the look of the price action. We'll be looking to sell the Aussie dollar below the 7100. We're potentially going to look at, we can look at both of these levels, and then a second opportunity to capitalize on the breakout if we get that opportunity. So this is a 15-minute chart, and there's an argument to suggest that we could have one shoulder to, even though we don't really have the necessarily the symmetry really with this trade, but it's something that we're just seeing, so we will comment on it. Okay, so maybe a couple of opportunities may exist on that. Eventually, just a strong breakout above the 28.85. So we'll wait and see. So we've really got to be a little bit more patient today, and kind of wait for the high probability trading opportunities, and that's why we spend a lot of time with our traders looking at their approach and their the need to be consistent with their trading strategy and have a methodology that allows them to select the opportunities, allows them to enter, exit, manage that trade, and the psychology as well behind these markets is very important, and the approach to risk management as well. So all of these things start to fit in with one another, and patience as well is crucially important. So a trader's ability to be consistent with their approach, to be disciplined with their capital, and to be patient, to wait for those high probability trading opportunities, and then when those arrive, you can really start to generate some profits. So last week was an interesting week. We had a couple of break-even days followed by a couple of positive days, but quite choppy market conditions really. So we were just fairly comfortable making a bit of profit last week, but nothing of any major excitement, and all of that was very much down to the market conditions that we have to trade. So you always hope that September's going to start at like 100 mile an hour, and sometimes that's not the case, but obviously things can change pretty quickly. We'll see how these markets start to behave. So guys, if there's any markets you'd like us to look at, I'm very happy to look at other markets if you would like us to do so. We do focus on the major currency pairs. Of course, there's minors and exotics as well. So do let us know. Post into your chat box if you do have any markets that you'd like us to look at. More than happy to use this time really to discuss markets, look at opportunities while we kind of wait for these opportunities to arrive. Yeah, the Aussie Swiss, interesting one with the Aussie Swiss there, Lewis. So what I'll do is I'll just take these off. I want to draw your attention to just a couple of things, just basic strength and weakness effectively. So when we look at this on a daily time frame, you can see there's a bit of Aussie strength creeping into this market. Same with the against the dollar, same with the euro and the pound. So because we're getting that Aussie strength, we compare it against the Aussies, the dollar Swiss, and you can see that the Swiss has sold off considerably against the Aussie. So as far as today's trading is concerned, Lewis, straight away, if we do some strength and weakness analysis, we can see that we're likely to get a buy opportunity in the Aussie Swiss, if that makes sense, because the Swiss is selling off against the dollar, but the Aussie dollar is strengthening against the US dollar. So just by the process of elimination, you can work out that actually, without going into that chart, and you could look at the same for the Euro Swiss and the Pound Swiss to varying degrees, but without looking at the Aussie Swiss chart, Lewis, we can see that what we would be looking to do is to capitalize on a buy trade in the Aussie Swiss. So now we'll just translate that knowledge and understanding and see if that really does stack up or not. We've had quite a strong Swiss trade kick in over the last few weeks. So let's convert this to that. So let's do a little bit of analysis, just looking at some major strong levels. Okay, so we're going to take these swing highs and significant swing lows and see how these levels stack up. So looking more closely towards this current price point. Okay, so let's zoom in a little bit. So we've seen the Aussie Swiss strengthen against a number of markets, and these markets, it was around this time here, sort of a couple of weeks ago, where we saw a really explosive move. And as you can see, this is a really strong move to the downside. Like it's a good strong trade. But what we can see down at this level is a bit of a floor being created in the market. So we're not quite at a major level of support, mind you. There could be other levels. If I just zoom this across a little bit for you. and there's probably a couple of other levels below, but this is just sort of basic support and resistance. So what we've seen, and it's no surprise that that these levels can hold up before we get a break of these levels. So I suppose the initial break is that one, then this one, and this is just straightforward, straight through that level of support, so I didn't even consider. And then we get the pullback, the bounce off the level before we get the extension lower. So you can see there's a bit of a floor being created in this market now, Lewis. So let's go into smaller time frames and let's see how this has played itself out. So now what we're going to do is we're going to kind of switch to more of an intraday analysis. So for this we'll convert it. So there's a bit of a process involved in trying to truly identify these high probability opportunities. We know that this was a strong level of resistance, so support on the way down, so it's very likely to become a really strong level of resistance on the way up. So do be mindful, do focus on this area up here, which has looked like it's going to act like a bit of a magnet, but there's going to be sellers coming in at these higher prices on a consistent basis. So we've had a double bottom and we've had a bit of a structural failure now to the upside. So we're getting this little bit of a move on an intraday basis. So the problem, I don't know what type of trade you're looking for, Lewis. Are you looking to buy it or are you looking to sell it? What type of trade would you, you're right to bring it up. The problem is, if you're looking to buy this market, it's a counter trend trade. Plus we've got some really strong levels of resistance just above these prices. So down at this level has a bit of a question mark for us, but you can certainly plan for this market if you want to go with the trend, which is very much to the downside. There could be a plan for a good sell trade, not just yet, but in the pipeline. You know, if price comes back to this level of previous support, you know, there could be a really good opportunity to capitalize on a strong sell trade at this level. So in terms of the buy trade was somewhere probably around here. That would have been for those that want to counter trend, that would be the trend that they'd be looking to take. That's not really kind of ultimately our style for trading these markets, so do bear that in mind. We kind of know what type of opportunities we're looking to trade. You know, all we need to do is just be nice and patient and wait for them to conform to our overall look, and that is a really strong sort of risk management approach. You know, that we have a really strong idea and what we want to see from each market before we get into it. So so you thought you were looking for upside but didn't see the downside as you've explained it. Yeah, listen, the only thing I would suggest about the upside trade is, like I was saying, like there's probably enough opportunity to see this sideways moving price action to get in at an earlier price. But all you're doing really, Lewis, is, you know, if I showed you this price chart and said what direction, if you could pick, if you looked at this price chart and said what direction would I like to be trading this market, I'm sure probably most of you, not all of you, would like to sell it. So that's the trade that we would look to take, is look for multiple opportunities to sell this market. If I just take this off, look for multiple opportunities to sell this market depending on this price action. Maybe a breakout trade, and maybe identifying a bit of resistance at these levels to take it to the next trade. So there'll be loads of opportunities for us to get into this market to the downside. They don't always have to be winners. They can be, you can have varying success, but maybe there's an argument to suggest that there's 5 trades in here from this level to the downside. Yes, there's a couple of buy trades in there. As you can see, they don't last for very long, because the overriding trend is to the downside. So I suppose one of the things that we often say when we trade these markets is have a directional bias. At least know what you're looking to do with the market. So identifying the type of trader. And if you say to me that, yes, I am a counter trend trader, then this is a very viable opportunity for you. But if you're someone that wants to trade the trend and go with the market forces, then this doesn't represent a great opportunity, because all it is a bounce back off the low. So the likelihood is we might get some continuation to the upside, but we're going to be attacking these lows once more. So how much higher does this price move? Obviously, that is the million-dollar question. We don't know. But what is likely to occur is the continuing of a trend to the downside. So that's when you see lower lows on the way down, followed by lower highs. So even something like this, which could still see a little bit more bullish behavior to the upside, is very likely to take a little move to the downside. And let's say this price action did occur and price rolled over, pushed really high, failed to make a new high, so effectively it's still in this downtrend. But let's say it bounced off the 68, 78, 76 again. Whatever high this market starts to create then becomes the major signal to the upside. So what you're doing is giving this market enough room to determine which direction this market moves in. And so this is what you need to be careful for, is the potential what's called a structural failure when we're trading the Aussie Swiss. Now if it breaks through this level, then this actually becomes a really strong trade to the downside, because we're continuing with the trend. So for us, it'd be the opportunities to buy this market would actually appear at a much higher level once we've seen how these markets are behaving, and look to stack the odds in our favor by capitalizing on a structural failure to the upside if we were going to buy this market. So really this price action here is not a viable opportunity for us. Now it absolutely will be a viable opportunity for other traders. We do appreciate that. And like I said, you might get a few more days of a bit of bullish price action coming in. It is supported with the dollar Swiss market. It's just at what price this price moves back to, we obviously do not know. It could come right the way back to here for all we know. It could just keep coming back. And obviously you could look at this then and suggest, right, well, you know, I wanted to get into that. But this is what counter trend traders are going to trade. They're going to stack the odds in their favor to see if they can get into that trade to the upside. It's just not the trade that we consistently look for when we trade these financial markets. Great stuff. So you can see it a lot clearer, and support and resistance is a really profound. It's a really useful skill to know. Because the first thing I look at when certainly when we trade these financial markets is suggesting, right, we've got a bit of short-term rallying, you know, so all of these sellers are taking a bit of profit now. That's the psychology. There's a bit of profit coming off the market, and maybe now some buyers are entering at this price point and, you know, thrusting this market higher. But I'm always interested to know who's in control of the market, and for that we can just zoom out a little bit, and we can clearly see that sellers are in firm control. There's no denying that, and this is more likely to be a pullback. So at what price would traders look to exit this market? As I've just said, in and around this level. The reason why we know that the 69.54 is it's previously been a strong level of support. So how many times could you look at these charts and think, right, we've made a low, we've bounced, we've broken out of a major level of resistance. So this is the trade we'd look to take. Firstly, take it to the downside, but then the pullback, we'd identify the 69.54 as somewhere there or thereabouts to take the next leg to the downside. And that's really how markets move. They kind of ebb and flow, you know, and it's just understanding what's happening to these markets is what's important. And of course, it doesn't have to come back to that level. it might create its little structural failure, you know, at a lower price. But then at least you can take a calculated, educated decision in terms of whether you sell it or not. So we're not saying it definitely has to get to this level. It might turn around before getting to that level, but we can rest assured that there's going to be more momentum coming in, likely, and they're very likely to jump on this sort of price action as well. So some would look to buy this market. You know, I can see the argument for buying it at the 6,900. I'd be concerned about buying it at this price now, just because there's strong resistance just above it. So do bear that in mind. We're talking about 15, 20 pips above that level. And this is what trading is for us. This is trading price action. This is just seeing what's happening with the price. And so doing our strength and weakness analysis between the Aussie dollar and the dollar Swiss, we can see that there's been an opportunity in this market. Now we test and see how valid that opportunity is, and we can now work out that in actual fact the move has already happened, so it's no longer a fantastic opportunity for us. But selling at this level would be a fantastic opportunity, so definitely one to keep an eye on. Okay, I do hope that makes a little bit of sense there, guys. Okay, so so what we can do, a bit of strength still in the euro and the pound. Not much happening in the euro yen. A nice strong move today to the upside, as we've seen with the Aussie Swiss, but not much movement recently, so it's just hanging around those highs. Dollar CAD has strengthened a little bit, probably giving back just a little bit to the dollar now again. Aussie dollar bouncing off the lows. We'd expect that to potentially continue. And what something like this can do, and you often see it, is that it could give you, maybe even if you're nice and patient and you're allowing this market to pull back, it can give you a nice little doji candlestick, which we can monitor the low, and we can capitalize on the next move to the downside. It would be kind of in keeping with the sort of the movement of the trend, which is to the downside. So this movement to the upside is not of major importance to us. It's the next leg to the downside that we'd be interested in. And even tomorrow we could get the next leg to the downside tomorrow, which means the weekly low, these lows in here, would be really important, and that would be our entry price. So until that happens, we don't want this market bouncing off this level again. So in fact, it might do it on a few occasions. So we want to avoid, you know, we want to be savvy, we want to be clever with our entries, we want to understand what we're doing, and take our time to do those and to conduct ourselves properly. And that's the only means in which to be consistently profitable, is actually be consistent with your decision making and know what you're looking to do in these markets, and effectively how you're looking to do them. So Aussie dollar, so we don't really want to be forcing these markets. We don't want to be sort of chasing markets or double guessing or anything like that. Again, trade frequency is an issue for traders, especially new and inexperienced traders, because they feel the need to constantly trade every session in, session out, whether there's opportunities or not. And I suppose from our experience, that doesn't often make an awful lot of sense. So surely it should be about the opportunity that exists, and not your need to actually buy and sell all the time. So just a little bit of slow price action today. That's all it really is. And tomorrow we might get some volume coming back in. We might even see some considerable late day reversals, which we've been witnessing for the last number of months. Well, last 1 month anyway. So we've seen a lot of movement in the latter part of the trading day. We might get that again. However, you need something meaningful to trade, and if we don't get that opportunity, we don't get it. So we certainly don't want to be forcing markets. So there's a bit of strength creeping in once more. The gold market, see if we're any closer. No, we're just bouncing off this low now. So this is why it's important to just stay out of some of these trades, because yes, we do like this market to sell, and we did get a little bit of a move just a little while ago to the downside, but we've now bounced off that. So actually selling at these higher prices might be a better trade for us. Not much happening in the euro. Sorry, the dollar yen, should we say. US oil, bit of strength creeping back in, so just horrible price action really. So the last market we are looking at is the S&P 500, and it's a break above the 28.85. But again, we are looking at the time, so this trade would very much be time orientated. So for example, if this trade breaks to the upside after 2:30, we're more likely to get involved in it. There'll be more volatility in the move, and it just means that there's a stronger appetite for this market to actually push to the upside. And what we'll hopefully have is a clearly defined stop loss as well in this market. So it is worth, of course, sort of keeping an eye on the clock, so to speak. So again, just to confirm the levels that we're looking to trade. So we are looking to sell the Aussie dollar below the 17.98. It could be an opportunity, a couple of opportunities actually in the New Zealand dollar. It doesn't range very much really in a day, and we might have seen the majority of the range in today's trading. Certainly doesn't feel like there's much volatility in some of these markets. We're just sort of meandering by the sounds of it. The S&P 500 at 28.85 to the upside, and last but not least, looking for a potential trade to the downside. And as you can see, the 18.89, as you can see, we're needing to sort of be a little bit patient with these markets, which is obviously not ideal. We'd like to be very, very active right now. And you'll find some sessions that are just completely explosive, and you know, we could be in 2, 3, 4 trades by now on another occasion. So we have to take the rough with the smooth, just trade the market conditions, understand the markets that we're trading, and know that there could be a little bit of volatility like this. Hi Arenko, you're just saying the EU's Barnier is getting Brexit deal is realistic in 6 to 8 weeks. I think they had a 7-week time frame. I think, was it 7 weeks from last week? So okay, so 6 to 8 weeks. I mean, that sounds like it's something that would obviously benefit the pound. So let's see. Yeah, there we go. So that sounds like quite an explosive move. So now this is turning into quite an interesting little trade, because we're approaching last week's high. Thursday's price action was. Thanks for that, Renko. And it's a lot of these news events as well that we're seeing. Let me see if I can get it up as well. Certainly not getting the news released just yet, so just looking at Bloomberg, but I'm sure it'll pop up pretty shortly. So there you go. That is a news event as we're looking at it. Really strong, explosive move. So thank you, Renko. Appreciated. So look, we're extending these markets to the upside. The pound dollar is taking a really strong move. So what is our plan? We discussed this morning. If we get a break above the 30.44, this is a trade that we'd be looking to get involved in. The reasons for that are remarkably straightforward. The market creating a low, a really strong move lower. We've got ascending level which kicked in last week, or again last week, and we've created a bit of the beginnings of an uptrend. So we've got a couple of highs in here, and a break above the 30.44 would constitute another high. So we don't know where this level is. It could be anywhere along this sort of area in here. So it would definitely stack up from a viable trade perspective. So again, we're breaking Friday's high, so that's interesting. And let's look at that on a 15-minute time frame. So a horrible price action in terms of looking to trade this market. So I'm getting a really strong impulse to the upside now. I just want to take note of the high of this market, which would be the 30.43. So it does correspond, and it would be a significant structural failure now to the upside. So for all those reasons, it might give us a nice opportunity to get in. I'll just bring it down to the 30.43 level. So let's see how this market now behaves around this level. We might just get a little bit of a bounce off where the market starts to come over to the downside. We might just, what we'd probably like to see actually, you see, if we get a breakout trade, let me start this again. If we get a breakout trade of this level, let's say that's a green candlestick, we've got a decision to make. If we get in anywhere around this sort of price, if that's our breakout trade to the upside, which it looks like we're going to get that breakout trade, we've got a real problem in terms of where to place our stop loss. So what we would like to do is to see the explosive move continue higher. I'll just get this. So if we get the breakout trade, we're not going to trade that breakout just yet, and it looks like we're getting it now. But if we get a bit of a pullback to this level, somewhere like that, we might look to take it at in and around this sort of price point. But these are the trades that we're going to, it's important for us to be a little bit patient with them. Again, most new and inexperienced traders will be kind of jumping into this, and what is likely to happen is a bit of a snapback. Even if another alternative, and this is just part of our planning, is to capitalize on a bit of a pullback in this market, then at least we have an opportunity to place a stop loss in at this level, and then we can get the breakout to the upside. So we've just got to trade what we see and not be too anxious with this trade. So we would like to see this market even pull back to maybe something like this level in here. If it could pull back, what would that be? 15 pips, something like that. then it creates a low in the market. So then if we get the breakout above the 30, 40, 43, then at least we've got a low that we can work with. Yes, it will be perhaps a 25, 26 pip stop loss, but that's not a major problem. Capitalizing on continuation to the upside is really what our focus is right now. The reason why we have the 30.44 at this high is because it's likely to provide resistance. Resistance traders are seeing this level and they're now getting involved to the downside. So where this attempt to push price low is going to end, from a support and resistance perspective, it would be nice if it was around the 30.17 level, and then we can look to actively get into that market. So potentially an interesting trade in the pipeline here. So only a small pullback off the highs. But even this pullback would give us an opportunity to use this low in here. So let's go into this on the minute time frame, which we are currently in the minute. Can I find out if any of you guys are planning on trading this market? Let's see how this interacts with. So what we're seeing is a bit of dollar weakness start to creep in. Even the gold market has had a strong bounce off this low. So as well as obviously pound strength, we're also seeing and experiencing some dollar weakness. So I do apologize, guys. I'm just conscious of the time. We do have our own traders over at the live trade room right now, so we're going to have to switch across to them. So we only do the first hour of the session through our YouTube channel. But for those of you that are interested in trading with us, please do read the description below, and you'd be more than welcome to join us. And you can access mentorship package for 2 weeks without any fees or contracts or of any kind. So do feel free to join us, and we'd be more than happy to see you on the other side. So we're just going to switch across to our traders here at the live trade room. So for now, just to wrap up then, there's some interesting moves occurring in the British pound off the back of a statement from the EU with regards to Brexit, and we're getting very close to breaking above the 30.43. So I'm going to switch across quite quickly, guys, if that's okay. Thank you as always for joining us. We'll be live again tomorrow at 8 AM for the European Open, and hopefully we'll start seeing some volatility creeping back into these markets like we're currently seeing with the British pound. So connect with us through our YouTube channel, and please do give us a thumbs up if you can, and subscribe to our channel below. That would be much appreciated. And if you click the bell function as well, then you'll be notified when we go live through our YouTube channel. But you can also connect with us through Facebook, Instagram, Twitter and LinkedIn. The details are all there up on screen. So thank you very much for joining us. We're going to switch over to the live trade room now. So from everyone here at the live trade room, do take care, and we look forward to seeing you soon. Bye for now.